Hello, this is Professor Enrique, and in these sessions, we'll be watching challenges caused by accounting diversity. In the prior two sessions, we look at why diversity exists. What are some of the reasons? And in this session, we can look at the challenges. This topic is covered in International Accounting course. Okay. So we are going to look at this in this session at the problems caused by accounting diversity. And we are going to break them down into 4 problems. The first one is preparation of consolidated financial statements. The second is the access to foreign capital markets. The 3, it's comparability of financial statements. The 4th is the lack of high quality accounting information. As always, if you listen to my lectures, every time I have a list, I'll go through that list and explain each point separately on a separate slide. So let's start by looking at the preparation of consolidated financial statements. That actually is one of the main topics, one of the main dishes of the whole course. What are the issues of consolidated financial statements? So let me take my pen. You know, I like to draw. So let's take a U.S. company called like GM, General Motors. It's a U.S. company that it's listed on the U.S. stock exchange, the NYC. Well, guess what's going to happen if they are operating in Mexico? They are operating in China. They are operating in the UK. What they have to do is they have to comply with the local regulation, and then they have their books in local currency. Books in local currency that need to be translated. Then why? Because this is a US based company. And then you have local accounting principles, which are different from the listed company. Local accounting principles different from the listed country. So whatever they follow, that accounting principle, they might be different. They have to make an adjustment for it, and they have to make an adjustment for the question. What does that mean for GM, for the US company? Well, that's considerable effort they have to make to undertake. There's additional cost, because you need to be familiar and to hire people that are familiar with both systems. And you need the expertise in different countries' accounting standards. So you need more qualified people, which is gonna create more costs for you. But look at the silver lining from an accounting perspective. If you are an accounting or business related student, that's good news, because it's gonna create more value for you and more and more jobs. So this is from the aspect of preparing consolidated, so because you need to combine those financial statements. Another problem is access to foreign capital markets. What does that mean? It means that if a company would like to they would like to raise money on a certain stock exchange, they have to comply with the requirement of that stock exchange. So they require financial statements that ask for the local accounting standards. For example, if you are a Japanese company, if you're a European company, and you would like to be listed on the New York Stock Exchange, you have to convert your financial statements into the US GAAP. Okay, so what does that mean? Again, considerable effort and cost involved. The case in point, it's in your textbook. If slimmer quite Chrysler. That was the first German company to be listed on the New York Stock Exchange. And I believe it's in the early 80s, the early 90s, not 80s, sorry. No, what happened is that it costs them $60 million just in administration costs, because the accounting team, the legal, the compliance, to comply with the SEC rules to convert their financial statement into GAAP, into the US GAAP, and it's gonna cost them 15 to 20 million on subsequent year in disclosure costs to maintain their listing privilege on the New York Stock Exchange. So there's a lot of money being spent to be listed in a foreign capital market. And the reason is because your accounting standard, your accounting record are different than the NYSE. And they are spending money. It's not on the sense of that it's not valued. Daimler collect or Chrysler, it's manufacture cars. So they are spending money on the manufacturing cars. So it's considered a non-value added activity because it's an administrative process. So another challenge for accounting diversity is comparability of financial statements. So what does that mean? It means when you look into two financial statements, for example, if you're looking at Verifone versus Verizon, you cannot compare them because they are prepared differently. There's a lack of comparability. If you are an investor, that's gonna that has an adverse effect, because you might have to learn in the system or hire someone to explain the difference between the two financial statements in order to invest in two different countries. So that's going to create problems for lending institutions. To lend money, if you go into a foreign bank, they have to understand your financial statements, performance analysis, how you measure profit might be different than how I measure your profit. So if you are looking at return on asset, return on investment to analyze your performance or your debt or to equity ratio, I'm going to have to find out exactly how you came up with your debt and how you came up with your equity, okay? Also, it's gonna create some problems for acquisition decisions. If you're trying to buy a company, you're gonna have a value to receivable, their sales. What is the foreign currency risk? All in all, you're going to need to do more due diligence. What does more due diligence translate into for the company? More cost. Again, more cost. Again, more cost is less value added. Remember? And let's go to the fourth component. The fourth component is the lack of high quality accounting information. Now, if you're dealing with a developed country like the US, you might have better quality, higher quality accounting information than less developed countries. So, and also, you can deal with a weak code of governance, of corporate governance, and you might have the lack of high quality accounting standards, and you might have an inadequate risk assessment, or the lack of appropriate disclosure requirements. So those are or could be the issues in a way or another that are present in the accounting record of a foreign company. Okay, why? Because they are using different accounting standards. And especially for disclosure, for example, they might have disclosure of the efficiency in terms of the related party transactions and off balance sheet financing. Maybe they don't have something called off balance sheet financing. If something is a balance sheet, you never know about it. Well, there's no hint in the financial statements. And I'm not saying that in the US it's a developed country, but again, the US is not a perfect system. But for example, there's a good case. Another again, like Enron case in the US, where they had many balance sheet financing, which was hidden in plain sight using accounting records. I'm just saying that those issues could exist. There's a high exposure to the foreign exchange risk, and they might not disclosure that risk. They might invest in highly speculative assets that they might not disclose that this is a highly speculative asset. So you will have to do more due diligence because there is not enough disclosure. Contingent liabilities, uh, uh, guaranteeing foreign currency loans, that you might have contingent liabilities that are not properly disclosed, or you might have loan loss provisions that are not properly disclosed. All of these are risks of disclosure. The company is not disclosing enough because the accounting standard does not require. You remember the secrecy that we talked about, because the accounting system is value or has more values on secrecy, and they might think those are secret information that might reveal something about the company itself. So but it's my car and the lenders, and it might harm the investors if they don't really understand the risk. All in all, as you can see from all of these challenges, we need to assist them. Okay, we need a system that's gonna help us understand all these financial statements. So that's why the IFRS, or the International Accounting Standards Board, the International Accounting Standards Board with the IFRS, are trying to have one system, or we have an international convergence of financial reporting. And this is why what we're gonna be talking about in the next session of international conversion. How are we going to try to minimize the differences, or try to harmonize all the differences into one system, to try to create a single set of international accounting standard that can be followed by all the companies across the globe? Not an easy factor, as we talked about in the prior session about the reasons of why we have accounting, but we are getting into it. So thank you very much. Don't forget to read the book chapter for these sessions. Bye-bye.